Good afternoon. This is Bruce at Fleet Capital Management. Right now it is Friday afternoon, the 29th of July. It's afternoon, I guess, here in the West Coast and early evening on the East Coast. Market's been closed. I've done some work and I just wanted to show you what the markets look like. We've had a very good week, but what the markets look like technically, there's a number of things that look like they are changing, and I'll show all of that to you. Of course, we've got to read our disclaimer. Video presentations intended for educational purposes only. Discussion of the security is not a recommendation to purchase or sell the security. Feel free to subscribe to the YouTube channel. And if you have any questions, contact me at Fleet Capital Management. Also, I think I put this in last week's video, but this is now the home page of Fleet Capital Management, and it makes it much easier. On the home page, you can just click schedule a video call with Bruce, or you can click weekly market analysis videos. This will take you to the most recent video, and I think you'll see a string of videos. And if you click on schedule, it'll just bring up my schedule, and you can pick a day and a time that works well for you, and we will be booked. So again, I've now put this on the front home page, and I hope that makes it easier for you. So before we get into the actual charts, and yes, things are changing. They're moving much more bullish. We're not 100% there, but we might be 90% there into establishing a new bull trend. I want to take a look at the last month or so and examine some behavioral finance, which I talk about a lot, but I think this is a great time to do a quick review of this just to see that it's real. So this is the Fear and Greed Index. This is as of today, but as of today, I don't want to really focus on. What I want to focus on is 1 month ago, we were in extreme fear. And what this index generally tells us is when individual investors are in the extreme fear category, we are either at or very, very close to a market bottom. These things are not like a scalpel. They're not exact, but they're very close. So a month ago, we were in the extreme fear column. And conversely, when individual investors are in the extreme greed column, we start to get nervous, tighten our stops, and the market could be near a top. I will tell you that these two categories are not equal. The extreme fear is overweighted. It is more important because when markets go down, we have a more distinct visceral reaction than when markets go up. They are not equal when it comes to emotions. So I think that's important. Another chart that I want to look at, this is an oldie and famous chart. This is a psychology of market cycle chart. And when the market is going up, there's hope, possible recovery, and then there's optimism. This thing is real, belief, people get fully invested. And this is really individual investors, much more so than institutional investors. And then there's thrill. I'll buy more on margin. I've got to tell everybody to buy. I'm going to leverage my house and get as much money into the market as I can. And then there's euphoria. People think, wow, this is easy to make so much money in the market. We're going to be so rich. And that is the extreme greed area. That's over in this area. So obviously we're not in any of this. And then January 1st, the market starts to fall. Some anxiety kicks in, denial kicks in, and then this is what I want to focus on, panic and depression. And if I get a little annotation tool, bear with me 1 second here. Let's do, well, we'll just do this. Okay, hopefully this is going to work. What I want to do is I want to get this area. I probably don't want it in white. Let's try to make that blue. Okay, that might be easier to see, and it's not. All right, well, forget that. Here, now I can go. So in the depression area, which was about a month ago, sorry about the circles. I'm not very good at drawing with a mouse. About a month ago, when we were in the extreme fear category, I received a lot of emails and phone calls, which is normal and expected, and I want you to email me and call me. Some people said my retirement money is lost. How am I going to pay for all of this, where I live? How am I going to pay for whatever it is that your expenses are? I'm an idiot. What other comments, might we get? I should have left you and gone to a bank and just bought a CD. These are all very, very, very normal responses. And this is what this chart calls the depression phase. When we get into the depression phase, and when we get into the extreme fear phase, and let me clear a couple of these things. And when we get into the extreme fear phase, it's pretty obvious when we're in those phases. And the reason I bring this up to you is I want this to begin to get more obvious to you, so that you notice that when you're in this depressive phase, I can't believe it, I'm never going to make my money back, this thing's going to go down forever, whatever the verbiage is that you tend to use. What I want you to recognize is where we are in the market phase, because let me help you understand something, and this is critical. It's going to sound very simplistic, but it's very critical. The market never goes down forever, and the market never goes up forever. It goes through cycles, and these cycles have emotions all around those cycles. So what I really hope you get out of this, then we're going to move on from here, and I'm going to try to bring up a shape again, and I'm going to try to do a much better job of color. So bear with me one second here. There we go. So the next time you recognize in yourself euphoria, I want you, or extreme greed, I want you to start thinking, we might be at a market top. It's very possible. And the next time you get to an area of depression, anger is usually first, and then depression, and thinking that the market's going to go down forever and all is lost and all of that stuff. I want you to start in your mind understanding that maybe we're really close to a market bottom. So this was all about a month ago that this all took place. And let me show you what the market was doing a month ago. Here's the stock market. Here is today. This is today. And about a month ago, it's hard to read, but I believe this was 6/17. This was June 17th. It was just a couple of days before my birthday. I remember when I was getting a lot of emails. I highlighted this for myself because if you go back to the video I made at this time, I was suggesting that we had very, very probably hit a market bottom for this bear market. And I marked it on my chart just to remind myself, where was it? Now, could the market go back down to that bottom again? Yeah, absolutely could. Could it go lower to that bottom and then this is not the market bottom? Yeah, it could. The market can do anything it wants. But the reason I bring this up is when you're having extreme depression, not you know what I mean by that, extreme fear, extreme negative thoughts about the market, it's always going to go down, I'm never going to make my money back, all of this stuff. I want you to know that usually, not always, but usually we are at or very close to a market bottom. So anyway, I found this fascinating. I hope you did as well. But now let's move on to some charts. And I'm going to jump around a little bit. I want to go over here. This is, remember, I look at about 8 or 9 different pieces of technical analysis that help me determine, are we in a bull market or a bear market? Are we in a short-term bull market, a long-term bull market, what have you? And this color up here is really, for me, represents a short-term bull market. It was a week or two ago that on my emails, I switched the verbiage in my trend analysis to a long-term bear market, short-term bull market. And then this color, I colored this blue. These are indicators I generally use for intermediate. I want to see if it's developing and becoming a more intermediate term bull market. You can see some of this stuff was down, it just turned up. Wherever I have a box, that just means that the signal has changed from the prior signal. So here it's been down. Yesterday this changed to up. This is called the MTI. So that's why it's got a box on it. So that's all that means. And then these 4 or 5 tend to be longer term bull market. And this is the go, no go charts that you're going to look at. That's been kind of bouncing around between neutral and up. TSI, which I'll show you, is up. ATR is still in, NTZ stands for the no trade zone. I'll show you that in a minute. The 2050 is a really important moving average. Unfortunately, that's still down. Today, on one of the tools that I use, we finally, for the first time this year, switched to what's called a confirmed up position. So if you look at all of these, we have an awful lot of green, and you can just look at it that way. And then we've got a couple more that are, I want to promise you, and I'll show you, they're very close to going green. And then the last thing is ADX. ADX is a measure of trend strength. And generally speaking, an ADX below 22.5 represents a generally weak trend, and above 22.5 is considered a stronger trend. So we're not in a strong trend yet, but also look at this. We haven't filled out our last 2 blanks. So let's see what that means for us. Here is one of my charts, and this shows a couple of things that we just saw on that last graph. This shows my ATR dots, if you will. We had purple and red, just think 2 dark colors. We were in a clear downtrend. And then a little while ago, about a week or so ago, we went to a dark and light. And this is what I call a no trade zone. No trade zone means it could go and break to the upside. It could go and break to the downside. It is an area where it's trending sideways. Usually it means the trend is trying to change, but sometimes it doesn't. So if I go back to that here, you can see we are still in a no trade zone, which is what I call it. This is a system that I designed to help me. Yes, the market has been going up, but it just hasn't proven to me yet that we're completely done. It's the last things. Here is that ADX line that I was telling you about, and we've got TSI line. I mean, these are all different measures. Also on this particular screen, this green line is a 20-day moving average, and this gold line is the 50-day moving average. They are just about kissing. But the green needs to get above, the 20 needs to get above the 50. And if I go back to my thing, you'll see that this is still red. It's still down, but it is awfully close. And this no trade zone is awfully close. Let me go back. We're in the no trade zone, but look how close we are to the top. So let's say today is Friday, the market's closed. Let's say Monday, Tuesday, Wednesday, something like that. The market closes, and it has to be the close. It has to be the market close, not what it does during the day. If this closes above, then we will have 2 light colored ATR dots here. And we will also get the 20 above the 50. When that happens, we're in a bull market. The only thing left, and I don't use this as much, but it is kind of important. The only thing left is these 2 moving averages still need to get above the 200-day. But I'm going to start investing now because it could be a little while before they break the 200-day, and I want to get a head start on that. So if we go over to another chart, this is my go, no-go chart. And what I will do is, let's see here, I'm going to just expand my daily chart. That didn't work, bear with me. Let's see what happened here. Let's go back. Close that and go down. Sorry about that, bear with me 1 second. This is what happens when you've got lots of computers open. So I'm going to try it one more time and see if this works. If not, we will work around it. There it goes. Okay, so this is my, and everything we look at right now is the S&P 500. This is my go, no-go charting system. And for all of this year, I've been explaining to you that the dark purple is a strong downtrend. The lighter pink is still a downtrend. It's just a weaker downtrend. I told you that we need to get to these amber color bars. This company who makes this system calls these Go Fish bars. And what they mean is We don't know what's happening. It could be a trend change. It could just be going sideways. So you're better just to go fishing. And I think that was taken from the famous investor Jesse Livermore, who said, there's a time to be bullish, a time to be bearish, and a time to go fishing. So I think that's where they stole it from. Well, you can see all of these darker colors, and then we went into these amber go fish bars, and then we got a weak uptrend. We went back to an amber bar, as you can see there, and that's okay. An amber bars don't do anything. So if you're in an uptrend and you get an amber bar, you don't do anything. And then we got another, whenever there's an up bar following an amber bar, that's called a go trend. And then it switched in the last 2 days to blue, which is a strong bull market. Now, these colors change a lot. In a bull market, you'll see them go from dark blue to aqua or light blue to maybe it'll go sideways. You'll get these amber bars. That's all still considered a bull trend until you start to go in these darker colors. So everything is pointing up. This blue line that I have here is the 20-day, and the red line's the 50-day. We still haven't gotten across that yet, but we're getting close. And the other chart, just in case you were curious, let's see here, bear with me once again. Oops. Something very weird is happening with my charts today. There we go. So if I were to close this, this left side, it's still the S&P 500, but it is a 30-minute chart. So each bar is 30 minutes. This is primarily, but not completely, this is primarily how I trade my options. And I'm going to show you our options trading. So what's the point? The point of all this is we're really, really, really close. We're not 100% there yet. We're about 90% there. If these last two symbols change, these two indicators change, we'll be about 98% there. And I'm going to start investing for both groups. Group one is more aggressive. Group two is a little bit more protective on the downside, but we have everything that I need and we're going to start reinvesting. And that could be Monday, it could be Tuesday, it could be Wednesday. I don't know when it will be. But when those happen, and I'm very disciplined to wait, when those two things happen, we're going to start refilling up our portfolios. We may not overnight move back to a 100% invested position, but we're going to be moving in that direction. And once we cross the 200-day moving average, we will be 100% invested. So a lot of stuff happening, and you're going to see a lot of changes in your portfolios as we move forward. Lots of more, I hate to say aggressive, but lots of more concentrated growth types of investments will be showing up in your portfolio. Some individual stocks will be showing up in your portfolio that I think we can make money on. Some ETFs certainly will be showing up in your portfolios that I think we can make pretty good money on. And then for those clients who trade options with me, I want to talk about that for a second. And if you don't trade options with me, this is still helpful because you may choose to do this in the future. So I want you to know each one of these tabs is a different signal that I use to get different types of investments, and I track every investment. Here is, well, let me go here first. Here is, whoops, sorry about that. Here is options that I'm trading on the S&P 500. These are fairly short-term options. They're 7-day options, and everything is closed. There's nothing that is open right now on those. I had one loss. The loss was much greater than I had hoped for. And you can see I put a note in here. I'm changing to a new stop level. It doesn't matter what it is. It's called correct plus 50% on the very next trade. I'm not going to allow this to happen again. This is too big of a downdraft. Even though we've been making 18, 12, 25%, 16.5%, averaging 17.83% on our winners, this is too big on a loser. And we are still running at about an 80% success rate. Anything over 70 is absolutely fabulous. You have to understand that. Some people will say anything over 65% win rate is fabulous. Well, this is really good. This is really good. If I can bring this down to about 25%, then what that means is it may only take one trade to get that money back. And that's my goal. Right here, it takes 2 trades, 2.5 trades to get our money back when we have a losing trade. I want to get that to be a really close to a 1-to-1. So this is some S&P 500 trades that I've been doing. These are different. This is called credit spreads. I do these on individual stocks a lot, and I just did one for clients who are trading with me in symbol UNG. That's US Natural Gas. We held it for 4 days, which is actually a little longer than I expected, but we held it for four days. But we did 17.5% was our rate of return on that 4 days. And so far, I know there's only 2 trades in here, but we're at 100% success rate. Swing trader, when it doesn't have red or green, it just means that this trade is open. This is a trade that I put on for clients in, I think this is Hormel Foods. I put this trade on today. Actually, that should say the 20. I went in on the 28th. Clients went in on the 29th. And because I just wanted to make sure this was moving in the right direction. And it's open, and we're actually up. I think we're up 4.5%. And you've only been in it 1 day. So hopefully that will work out. I have another one called weekly option, and I haven't put any trades in, but this is another signal that I've been testing. It's worked really well on my own account, so I'm going to start using this in client accounts as well. So my point is, every different type of option strategy that I'm using, I'm going to be tracking every single trade so that you and I can see exactly how they're doing at any time. And this is called attribution analysis. I want to see if one system is performing better than another system, or are they all performing about the same? Right now, funny enough, on this credit spread, what are we averaging? 17.56. On this, on our wins, what are we averaging? 17.83. We did have a loss in there. I separate out losses. So, you know, interesting, just how we can do this. We're going to start adding stocks, and I have spreadsheets for my stocks, my different stock systems that I use. And as we get into bullish ETFs, I've got we'll be tracking those, and leverage ETFs will be tracking those. The point is, every single thing that is in any client portfolio will be tracked on a line-by-line basis, so that at any time, if you want to see how each investment is doing or each style of investment is doing, we have it. And this is going forward. This is never going to change. Okay, so I hope that makes some sense to you as well. Our options trading. Oh, one last thing I'll show you on the option on all of the trading. Every single tab, which means every single different type of investment, has in red the type of stop loss that I'm using. And they're different. Like this one is credit received, CR, plus 50%. This one is, I'll let it go down 25%. I'm trying to make 50%. This one, I use a trailing 30% trail, but I have a profit target of 100%. When we start adding ETFs, those ETFs, I thought I had written this in here. Let's see here. No, but I'm going to update this. But when we will have a stop that is very clearly defined, maybe I put it over here. Yeah, here's what you're going to see. If we close below the top, the tight ATR level, we'll add a 2% trail. And the ATR level is, to remind you, these dots. So once we get back into an uptrend, if the market closes right below this is the tight one, the tight ATR level, we'll put in a 2% trail. If it goes down the next day, 2%, we're knocked out. Usually it doesn't. It starts to go back up, and we get to stay in, and then we take that off. So the point is, every single system that we use has a very credible, a very important stop level that I'm monitoring on a daily basis. We will never allow large losses to happen again. Sometimes I allow them because I know it's in our best interest. But what I've realized is, even when I know it's in our best interest, it is psychologically very difficult for clients to handle. So I'm just not going to do that anymore. So the bottom line is, everything's working right now. We're not in a long-term bull market yet, but we're really, really close. Every indicator that I look at, I need to break through these ATR dots, and I want this 20 to go across a 50. If that happens, I suspect it's going to happen next week, but I don't know. If that happens, or when that happens, I should say, we're going to start moving towards a more fully invested position. I will tell you, we're looking at the S&P 500. We are just below that ATR level, and we are just below that 200-day moving average. Remember, I always talk about support and resistance. Resistance is like a ceiling. You've got two ceilings right here, two layers of ceilings. This might not break through there for another week. I don't know. I just don't know. I wouldn't be surprised if it comes back down and then takes another run at it and tries to break through. That's normal. But we've got two layers of ceilings right there, and that's significant. We need to break through that, and I don't know when that's going to happen. I suspect it's going to happen next week. And one of the reasons I say that is because, and without going in through too much detail, here is the ADX, and the ADX is just crossing above this negative DMI. That's usually a pretty strong signal. We'll see how that plays out. So we're getting closer. One thing I'll leave you with, because I've been talking about this, ARKK. This is a fund that I'd love to get back into, but we're still in that no trade zone, and we're still trading sideways. And the 20-day is still below the 50-day. Green and gold. So I'm just, even though I've gotten one or two emails saying, hey, it's really run up in the last few days, let's jump back in. It's just not time yet. I don't have the confidence, so it's just not time yet, but it's getting close. All of this stuff is getting close. Hopefully this will prove to hold to be the bottom of this bear market. And hopefully we will have a nice orderly trajectory moving higher for the rest of this year. It's kind of what I expect. We will have bad days in there, but again, we're looking for trend analysis. We're not looking for day analysis. So that's a story. I know this was a little longer than normal, but I felt there's a lot that is potentially changing in our lives right now. So I just wanted you to see all of that. If you have any questions, please reach out to me. I'm always here, as you know, and let's keep our fingers crossed and see if we can't break through a couple of those last resistance levels and go back into a bull market trend and kind of put this one behind us. So call me if you need me. Talk to you soon. Bye-bye.